Do you feel for retail investors who have a shot at perhaps, being allocated some of those shares, that they should wait in general post a listing so that the euphoria at least has died down a little bit and valuations are a little bit more reasonable? Is that a fair strategy?
No, that's not an unreasonable strategy because across the world, when companies first go public, the traders rule the game, right? That was true in the US, it's true in India, it's true in China, it's true in every market.
Yeah.
Which means it's mood and momentum that drives day-to-day price changes. I've discovered that mood and momentum can shift in a moment. I remember when Facebook went public and I valued Facebook and I said, I think it's overvalued. 3 months later, the stock had halved in value and it's been in and out of my portfolio since.
Okay.
The same thing with Uber. At the time it went public, it looked overvalued to me. 4 months later, it was cheap. So what I would suggest is if you really like a young growth company that's going public, whether it's Paytm or any other company, value the company. You don't have to jump in at the time of the IPO. But keep revaluing the company because one of these days it'll make it back onto your radar as undervalued. Never give up on a company. Think of it as a work in progress where you're valuing the company, the market's pricing the company, and you're hoping to get it at the right price.
You mentioned Paytm. I'm curious to ask you about, whether it's fintech, whether it's Ola in the auto space, Ola with its big EV play. There are, these companies that are now chipping away at the older listed behemoths in the space, whether it be finance, whether it be auto. Do you see that as a trend that's going to continue to grow as some of these tech majors start to contribute more and more to the market cap percentage of GDP?
In some sectors, yes. In fact, there are two things I look for sectors that are likely to be disrupted. One is I look at how big the market is. Financial services, obviously a huge market. Automobiles, a huge market. But the other thing I look at is the existing status quo. I mean, one indicator that a business is going to get disrupted is if nobody's happy. Customers are not happy, companies are not happy, regulators are not happy. And let's face it, that's the state of the game right now in financial services and automobiles. Nobody's happy with the status quo. And when nobody's happy, you're open for disruption. So I think there are sectors where I think disruption is going to come simply because the existing way of doing things is no longer working. It hasn't worked in automobiles for about 30 or 40 years. I'm waiting for airlines to be next on the list because I know airlines have not worked for 50 years across the world. People can't figure out how to run a money-making airline. So you're going to see disruption coming to those businesses where the existing way of doing business is no longer working.
I know I'm pushing you on this. I know it may be a little ahead of time, but Ola or Paytm, which one would you buy?
Depends on how they get priced. I mean, I would prefer Paytm to Ola because the ride-sharing business is a complete disaster around the world. I mean, ride-sharing is one of those businesses where they figured out how to grow, but nobody seems to have figured out how to make money. And it's not just Ola. It's Didi, it's Grab, it's Uber, it's Lyft. None of these companies have figured out how to make money, partly because there's no stickiness in the model. What I mean by that is I have no loyalty to Uber or Lyft. I'm going to take whichever one is cheaper. And the drivers have the same view. Paytm has some real potential because I think this is a business which is huge. Payment processing is huge and financial services is huge. So if I can get Paytm at the right price, I'd prefer to have Paytm in my portfolio over Ola.